You are listening to ChartingWealth.com for Friday, the 22nd of July, 2016. We're getting ready to go over these charts to talk about what's been going on in the market. We've just closed out the two-day candle ending on the 21st of July. What do we actually see going on? Well, we see a market that keeps going up. Now, for the day, technically, the market was down 0.41%, but we have a green up candle. That down movement over the course of the day shown in the upper wick means that the market had at some point approached up to that point and then pulled back. On the second day of the two-day candle, we still have movement above our two-day trend line. We still have a growing derivative oscillator that's getting bigger, and we continue to have the MACD and the signal line move upwards and stay apart. They are not converging, that is coming together. Now, if we look intraday, what do we see on our 4-hour chart? Well, we saw some down movement in the morning, actually a lot of hesitation, a lot of questioning by the market, and then followed by down movement in the afternoon, and that was stronger down movement. In fact, the afternoon down movement was a long wick, which the market went even lower. It pulled back on that. We have our pullback occurring. We don't have a crossover yet on the total market, showing that indeed the pullback is over and there's a crossover going back up where you could safely get into the market. So our pullback is still underway. Now, if it doesn't go back up and the whole market ends up turning over and going down on the two-day chart, then it wasn't a pullback, it was a reversal. That's why we wait for that pullback to move back up in the upward direction before we look to get in and ride any potential trend. Okay, until a trend is confirmed, it's not a trend that we trade. All right, that is where we are on the the IYY. We're going to the SPY. IYY, again, is the total market index fund. It tracks the whole stock market. SPY is the Standard & Poor Trust Series by Spiders. It's, again, an exchange-traded fund. What do we see there? Well, we've got confirmed crossover going up all the way back on the 11th of July, and the market has continued to move up. We have, again, another green candle. Technically, the S&P 500 was down 0.38%, but again, we have a green up candle showing upward movement. Derivative oscillators continue to excel upward, and the MACD and signal line continuing in a moving up direction and are not coming together. They're staying apart. They're diverging, not converging. So if we look at the 4-hour chart, what do we see? We see the market again started to move over. We crossed over. That is backed up because our movement was up, and then we backed up on the short chart starting on the 19th of July. We're continuing through on the 21st with down movement. We are waiting for a crossover of the MACD, the blue MACD line over the red signal line going up. That would be our safe jumping in point on the S&P 500 to make an upward trade or investment, that is purchasing the S&P 500 in order to gain as it continues to move up. It's backing up right now, so that has not occurred. It may not occur. If it does, we want to be ready for it. Okay, let's go back to the two-day chart, see what's going on. Let's take a look at the Qs. Again, that's the NASDAQ 100. It's continuing to accelerate up. We have a nice size upward candle. We're above the two-day trend line as that candle on the 21st, that two-day candle closes out. Derivative oscillator, MACD, all continue to move upward. We're above the two-day trend line. Let's look at the 4-hour chart. What do we see? Well, we had crossed over going up after a backup occurred between the 19th and the 20th. Then it looks like we've got a bit of a crossover going back down toward the end of the day. We're still above the two-day trend line. We are not looking at jumping out at this point. Hopefully you got in sometime either in the morning on the 20th, early in the afternoon, or perhaps you even looked to get in sometime in the morning when the market was down. Continue to watch. We again are above the 2-day trend line. Derivative oscillator has lost some of its speed. We do have a technical crossing going back over, at least in the afternoon. A lot of that loss was paired off. Again, 0.23% is what the Qs was down. We still have a confirmed up movement on the big chart. So continue to watch. Maybe there'll be another potential entry point into a NASDAQ 100 or Qs trade. All right. Now, lastly, we're going to go to gold that was up 1.54% for the day. Gold trying to make a crossover going down. Looks like it's just doing that. We'll see if there's up movement tomorrow in gold. It may keep that crossover from holding, but right now derivative oscillators in the negative. Gold has technically crossed over going down on the big chart. Let's see what we see on the 4-hour or half-day chart. We saw up movements in gold in the morning, and in the afternoon, gold is trying its best to cross over on the short chart going up. We shall see if that occurs. If there's more strong movement in gold, it may very well not cross over going down. It may cross over about the same time that it pulls the 2-day chart back up into positive territory. May cross over going up after quite a sustained pullback, and you might find a jumping in point. You can get in when everything crosses at the same time if you're ready to do it. Just have to see how the market shapes up on Friday. How will you know what the market's going to do on Friday? Well, you know what it is leaning toward doing if you have the 2016 Stock Traders Almanac by Yale and his son Jeff Hirsch. If you don't have one, I keep telling you, you need to get one. It's the best $50 or so you will spend. Yes, half the year is over, but it's worth $50 to have for the rest of the year. Lots of great reading. Commit yourself to reading some of it every day. And guess what we've just posted? We've just posted the first chapter to our book, Charting Wealth. That is how to empower your investing by learning to read the stock charts. I hope you'll enjoy the first chapter. We're going to try to put out a chapter about every other week. And until we get the whole book put out, we would appreciate your comments, any kind of ideas you have, any edits you might recommend. Please listen to it. Let us hear back from you. We so appreciate you. We want to hear what's going on for you. You can always go to Charting Wealth and write us, chartingwealth.com. You can follow us on Facebook, Twitter, Instagram, YouTube. You want to help us out? Please go subscribe to our podcast at iTunes. Give us a 5-star rating. Say something nice about us. It helps move us up in the metrics. You guys have made us the number 7 most popular stock market podcast in the world, and we very much appreciate that. We are here for you. We want to help you learn to read these charts, because I'm telling you, if you can read a stock chart, you can make money in the market. Now, we're not a stock calling service. We're simply an education firm, but we want to educate you so that you can practice, like we talk about, opening up yourself an account at any of the online brokers, putting in a, when I say opening up an account, opening up a virtual account. Put $1 million in and then start trading with that and see if you can become a multi-millionaire, not a thousandaire. You don't want to start with $1 million and end up with 1,000. You want to start with $1 million and end up with 10, 20, 50, 100 million. We want you to practice, to listen to what we talk about, to make this stuff work for yourself. And when it does, and you get really good at it, then you can make your own decisions. That is what this is all about. Also, please don't forget, subscribe to our YouTube channel. We're already at almost, I think we're at like 750, 752 right now. When we hit 1,000 subscribers, and I know several thousand listen every week, but when we hit 1,000 subscribers, that is hardcore subscribers, we'll then be able to do proprietary broadcasts for your benefits subscribers. So please go there and subscribe. Again, thank you so much. We'd love to hear from you. God bless. Hope we're giving you what you need. If not, tell us what you need. Thank you so much. Follow all of the trainings we have at the website. Go to YouTube. Listen to everything we do. We do it all for you at chartingwealth.com.